Hi, this is Greg Bridges with Trading the Pips. So today we're going to go over the stock market and how to trade in the stock market more specifically. A lot of people have been hitting me up on my email, text message, IM, IG, whatever, and they're asking me, how do I even get into the stock market? Everybody has all these concerns that are going on right now with the pandemic that's at hand, COVID-19, aka the coronavirus. So if you've been paying attention, you know that the stock market has plummeted in value. Cryptocurrency went down. Even foreign exchange was affected. So the different currencies of the different countries, right? They're all affected by what's going on with COVID-19. So what I'm going to be going over today is pretty much how to get into the stock market. The most easiest way I can tell you is to type in Robinhood investing inside your search engine. Now, this is Microsoft search engine, but you can do it inside Google or anywhere else. So Robinhood investing. And then this is what's going to pop up. It's time to do money, Robinhood, and just click on it. So get this web page right here. This is their main web page, right? Their homepage. So there are other platforms that you can go to. TD Ameritrade, E-Trade. I will tell you that Robinhood is the first of its kind in terms of they have zero commissions in regards to buying and selling stocks. In the past, TD Ameritrade and E-Trade actually did have commissions. Now they don't anymore because of what Robinhood came out with. No commissions on trades. So you can scroll down just to look and read and all this good stuff. But as you can tell right here, it says Robinhood, a pioneer of commission-free investing, gives you more ways to make your money work harder. So you can go through, break free from commission fees, which is what TD Ameritrade and E-Trade were doing, and many others. So you don't have to worry about that with Robinhood. You click on sign up, which will pull you to the next page. So this is your account page. So once again, it's going to ask you some information. It asks you your first name, your last name, your email address, and your password that you're going to put in for yourself. Then you're going to click continue. Now, I already have an account set up, so I can't go on and click on continue because it's not going to allow me, right? Because I haven't put information in. But we'll go over basic info. So basic info, once again, will be questions they're asking about you. It could be your name again, your first and last name, your actual address where you stay at, your social security number in terms of your SSN, and just to make sure you are who you say you are, and that goes hand in hand with identity, where they may ask for a picture of your driver's license or ID card, so once you give them the picture of your driver's license and ID card, if they ask for it, they're going to verify it against your actual name and where you say, because your address and all should be the same, right? And then they say, hey, you are who you say you are. And then we go over into the funding side. Funding side would be you linking a bank account of your choice, whether it's a bank account or credit union or whatever of your choice, to the Robinhood platform or their application if you have it on your phone or on your computer. And then you will hit the submit, boom. And once you hit submit, all your information will go into the system, and it may take, a day to verify everything. Sometimes it takes sooner than that, actually, maybe a few hours, maybe less than that, to verify who you say you are. And then you're ready to start transferring money. So in terms of funding, what do I say about it? I have two accounts set up to the Robinhood platform. So I move money from two of my accounts over to Robinhood when I want to invest. So that's exactly how you do it. So what I'll do is I'll go ahead and close this window, and so that you can actually see how it looks in terms of how a setup account is already done. Now I'll just click right here on my Robinhood account, right? And actually, if you guys would do me a favor, if you don't type in I'll click on free stocks. If you don't type in the actual Robinhood address inside your search bar in Chrome or wherever, you actually can click on my join.robinhood.com/GregB1126. You can click on this link that's going to be down in the bottom of this video, or type it in to your search engine, and you're going to receive a free stock. So if you use my referral link, you will receive a free random stock from Robinhood. And at that point, once your account is set up, they're going to send you that free stock. They'll also send me a free stock as well, some random stock. I don't know what it's going to be, just like you're not going to know what you're going to receive. And then once you become a member of Robinhood, you actually will be able to send those same links out to your family, friends, associates, whoever, and start receiving free stocks. Please, once you get a chance, click on that link or copy it, paste it, put it in your home screen, whatever you want to do. But yeah, you'll definitely get your free stock. So we'll go over into portfolio, and I'll click on, just the top right here. We'll scroll down to DSC. And this is the one that I want to talk about. So when dealing with stocks, we know that prices of stocks go up and down every day, whether it be a stock, whether it be a fund, or whatever it is that you are trying to purchase or sell. Prices go up and down every single day. So I'll give you an example of this particular stock. What you see, it says your average cost. It cost me 50 cents to buy each share of this stock. About 200 shares, it cost me $100. So 50 times 200 is $100. So if you see right here, it says total return plus $24. What does this mean? It means that my $100 went up to be $124. Why is that? Because currently the price of this stock is 62 cents. I bought it at 50 cents. So the difference between 50 cents and 62 cents is 12 cents, which comes out to be a total of $24 that I made. Now, why is this such a good buy for me? It's a good buy for me because if you go back weekly, the share price was 82 cents. So March 16th, it was trading at 82 cents. If you go to monthly, which is right around the time the COVID-19 outbreak happened, February 21st, which when everybody really started panicking, it was at $3.26. So a month ago, this stock was trading at $3.26. And as you can tell, it continued to go down $2. And it fluctuated in the twos before having another drop and going into the ones. And then having another drop and going into the 80 cents range before having a drop. And here you have it at March 18th at 23 cents. So anybody that bought it at 23 cents would be really smiling right now because once again, remember, at 12 cents, you had made $24. So I made $24 when it went up 12 cents. So anyway, if you had bought it at their price, you would be really smiling right now because it would be, it would have went up in value 3 times, right? So close to 3 times. So 23 cent March 18th. Right now it's sitting at 62 cents and I bought at 50 cents. Now, why is this significant for me? One of the reasons it's significant for me because I go right here in my stocks, my little stocks spreadsheet that I set up. I have DSC. It's a dividend yielding stock. So this stock pays me for owning it. It's going to pay me 4 times a year. 4 times a year for owning it. Because it's 3 quarters in each year, right? So it's going to pay me 4 times a year. I bought the stock right here at 50 cents. The current price is 64 cents. So actually maybe less than that, 62 cents. And so if I change the input 0.62, the difference is, actually, I did that wrong, 0.62. The difference is 12 cents. Boom. Now, I paid $100, as you remember, $100 for the stock for 200 shares. I'm going to get paid 15 cents per share that I own. 15 cents per share, which is 15 times 200, which is $30. So they're going to pay me $30 quarterly for owning the shares. For every 3 months, they're going to pay me $30 quarterly. So if you look at my my little formula right here, I got C6 times H6. So H6 is right here. C6 is right here. 200 shares times that right there. And that's what I'm going to receive quarterly for owning these shares. Times 4 equals $120 a year. So if I hold on to these shares for 12 months, I'm going to receive $120. I purchased $400, which will put me at a $20 profit. Difference is $100, $120, $20. Now, if you look back to the screen right here and we scroll down, we say, hey, great, you're already at $124 profit. So you'd have made $24 if you sold right now, and you would have got your initial $100 back. Well, that's a little different. The reason why it's different is I would have got my initial $100 back, but I only would have made 24. But if I click right here and I waited 12 months for DSC, I would still own the shares of 200. I would still own my 200 shares, and I would have received $120. I would have received $120. I would still own the shares. So my initial $100 is still there. It's still there. They just paid me another $120. So at that point, the shares would go down to be 1 cent. It wouldn't matter because I had already pocketed $120. So I got my original money back plus $20. But I still have some type of value because I still own those shares. Now, if you look right here, you see that I have $3, and I can actually scroll up so that you understand why I have $3 right there and 600 next to it. My expected sale price per share. So if you recall, if I go back to the screen and I scroll up, 1 month time frame, a month ago, it was selling for $3.26. If I go 3 months ago, which has us all the way back into December time frame, we're trading $3, $4 range, back into the $3 range. We're just scrolling on through February, $3 range. And then, late February, early March, we're in the $2 range. So, and it continued to scroll down until it got down to, 23 cents, right? So what we're trying to get for it is $3. Boom. So $3 a share times 200 shares. What we'll make once we sell this stock is $600. $600 is what we'll make once it goes back up to $3. So those 200 shares that I paid $100 for is going to get me an overall total of $600. So what did I make? What's my profit? My profit is $500. So I would have made $500 plus my $100 back if the price went up right now and I didn't receive any type of dividends or anything. But let's say it took 1 year before the stock price went up from the price that it is now, 62 cents, all the way back up to $3 and some change. Well, they still would have paid me my $120. So once it did hit the $3 point, I made $600 once I sold plus the $120. So that puts me at $720, right? So once you remove the initial $100 that I put in, I get my $100 back. What did I make? I made $620, as total profit. So I pocketed it, So you also see a couple of different stocks up here: VN, GMZ, GER, BP, DSC, and you see on some of them that I'm positive in, some of them I'm negative in, and you see some different prices in terms of annual share dividend totals, what I'm going to get back for holding the stock over a 12-month period, what I'll get back if I sold the stock at those particular prices, and then what I'll get back in total for all of them together. Now I can tell you that this is not all of my stocks that I own. This is just numbers that I have plugged in for a few that I do own. So in the end of the day, if I sold everything for these share prices, these expected sell prices right here, I'll receive $2,357. This is not to include if I had got paid all of these dividends right here. So you already know if I add those dividends in there, I'll be right around the $2,800 range if it took a month to sell. So once again, let's go back and say, he spent $648 on all of these shares together. But what his expected return is $2,300 and some change. So I'll just minus out my 648 from the 2,357. Or if it took a year, I would have $440 off of dividends. So it'll be 27 and some change instead of 23. And then I'll still minus out my $648. And what would I have? I would have somewhere around $2,100. I would have somewhere around $2,100 in profit. So I don't know about you, but that's good money made, right? That's positive. So if you look back, how long would it take me if I kept getting my dividends? If I kept getting my dividends yearly, how long would it take for me to pocket $2,300? Well, you can do simple math, and you can say roughly what's 4 times 5 is 20, right? So if you say 400 times 5, that's 20. That's 20. That's 2,000, right? So excuse me, 2,000. So roughly 5 years. 5 years, roughly, or give or take a some, give or take a few. So it will take me roughly 5 years, without doing the exact math, 5 years to get $2,000 if I just kept my regular dividend. It's 4 times 4 is 16, right? So 5 years and some change before I get all of that right there that I can expect to make. But it would take me less than a year and a half to recoup my original $648, and the rest would be profit. So what does it mean for me? It means that I might as well go ahead and sell for the 2,357 because I'm going to make a good amount of profit. I can take that money at that point and I can reinvest in anything that I choose to, and I can, double it, triple it, whatever it is that I plan on doing, or use it to pay bills. It's all up to you on what you decide to do. But anyway, hopefully I broke down the basics, and hopefully you don't, get lost inside my particular spreadsheet. Just know that what you should be doing when purchasing funds, stocks, or whatever it is that you want to purchase, that you should be buying at a lower cost and selling at a higher price. So you selling at a low price, you buying at a low price, and you selling at a higher price. That is the basics of buying stocks. So once again, it dropped down to 23 cents. Had you bought at 23 cents, or even had you bought at 50 cents where I bought it at, you would be $24 profit, or even possibly at $50 profit or more. Actually about $50 profit if you would have been around the 23 cent range, right? So actually a little bit more than that. But now you see that it's easy to trade stocks. Hopefully I broke this down to you on how to set up your account, what you can click on in terms of my referral link. I'll click back on it just so that you can see. Join.robinhood.com/Greg, Greg or B 1126, and you'll receive your free share of Robinhood stock. Some random stock, like you said, could be Microsoft, Johnson & Johnson, Facebook, or anything. And these shares are ranging around $150, $200 plus. So it's a possibility that you may receive one and make some good money. It's a possibility that you may receive a $5 share. But either way, it's free money, right? Anyway, you guys have a great day. This is Greg Bridges with Trading the Pips. I hope you enjoyed the video. Talk to you later.